how to become a consistently profitable trader without relying on trading indicators. A lot of people have this misconception that price action trading is simply reading candlesticks. Yes, that's mostly what it is about, but then it's not all. So in this video, I'm going to teach you a simple price action strategy that works in any market conditions. But before we do all that good stuff, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. When we hit 10,000 subscribers, I'm going to be doing a lit giveaway, funding 10 different accounts and giving 10 different subscribers free mentorship, right? You don't want to miss that. So many traders think that a strategy, if it just tells you when to enter a market, it's now called a strategy, right? It's not only about entering the market. You do have to know when to enter, of course, but you should know when to exit when you're correct and when to exit when you are also wrong, right? That is why in this video, I'm going to teach you the 4 most basic yet the most important things that you should know when you are using price action to trade any chart, right? So let's just hop right into it. The first one being the trend. I am always telling you guys about the trend, so I'm not going to dive real deep into that because you already know that the trend should always be your friend. So we have the trend, the area of value, the entries, and the exits. These 4 things, when you're using price actions, are the most important things you should take note of. So if we take a look on this, our Nasdaq chart, you can already see that we are on an uptrend, and this type of market, you need to take advantage of long positions. So because you have already identified the trend, you already know that you're looking for long setups. Now you need to know when to enter the trade. That is when the area of value steps in. Since you're looking for an area of value, you simply have to wait for the price to go back to where it had broken down before and sit at that zone, which is now a point of interest. You want to wait for the price to go back down to retest the previous highs. So in this case, we'll be looking to buy when the price reaches our point of interest, and sounds pretty easy, right? But there is more to that. Obviously, the next question will now be, how do I enter this particular trade, right? Then that brings us to the entries. You can simply put buying limits, buy stop orders and stuff like that, but that will not be the most effective, method, because you always want to see a strong rejection, a candlestick at that particular zone, which is not only what price action is all about, right? So yes, there are a lot of candlesticks in the Japanese candlestick Bible that you could have learned, but the most important thing that you really have to look for when you're reading candlesticks is the body, the structure of the candlestick, right? How big the body is, how small it is, how big the wicks are, how small they are, right? So you are comparing how large the current candlestick is at the point of interest to the previous candlesticks that it had. Using this example, you can see that we had previous small candlesticks, and then we have a really large candlesticks, and then it's at a point of interest. We are on an uptrend. We're looking for bullish setups. That is your entry point right over there. Simple. And then now finally you are in the trade, you're sitting in good profits, or it's going against you. You now need to know when you exit the trade, when you are in good profits, or when you exit a trade if it's going against you, if it's a wrong trade, right? And that now brings us to the 4th thing, the exit. So the most reasonable place to put your take profits, before the selling momentum steps in, is always going to be at a previous high. Like I'm always telling you guys, at a previous resistance level, right? Because if you want to be too greedy and set your take profits too high, right, there's a chance that the sellers are going to step in at a certain zone. Like I'm always telling you guys, that the market doesn't move like tap water. Just because you say sell, it's not going to just start dropping like that, right? It's going to go and retest, do this, that, and then form a little trend, or in some case it can even reverse, right? So you always want to be taking profits at those particular zones that are potential reversal zones. But then also you want to set a stop loss at a zone where if the market comes into that zone, it means that you are wrong, on the trade, right? You don't just set a stop loss at any level because you are risking $50 or you are risking $10, then your stop loss is $10, even though you are still in a good setup, right? You always set your stop loss at a zone that if the market then comes into that particular zone, it means that you are wrong on that particular trade, right? So you always want to give the market room to breathe whenever you're setting your stop loss. And that is pretty much how you do it when you are on an uptrend. And guess what? For a downtrend, it's just simply vice versa. So basically, learning how to read price action can be really confusing. You know, at times, even if you are a seasoned trader, there are times when I'll sit on the chart and it's just really hard for me to really understand what is going on with these charts, right? That is when, you know, using proper risk management, redrawing your charts and, you know, remaking your analysis, all of that steps in. And you always have to remember that it's not all the time when the market is going to respect your analysis, right? In the case that it doesn't, your stop loss is going to be helping you. And whenever you see, let's say you have taken a loss and then the next time you see the exact same setup that's going according to your strategy, you're going to still take the exact same trade, because just because you had a losing trade yesterday, it doesn't mean you're going to have a losing trade today. And just because you had a winning trade today, it doesn't mean you're going to have a winning trade tomorrow, right? So that's the only basic thing you have to understand. But take into consideration these 4 things that I told you: the trend, the area of value, the entries and the exit points, alongside the candlesticks that you have read in the Japanese Candlestick Bible. Put them together and then form a bomb price action strategy. You know what I'm saying? It's pretty easy to use, you know, and mostly works on any chart of your choice. But if you did enjoy that video, don't forget to hit the like button, turn your post notifications and subscribe to the channel. You feel me? With that, it's been Tina and I'm out.